Hello everybody, welcome back to the Contrarian. For those of you who are new to this channel, my name is Logan. I really like to talk about success investing and most of all, investing in a way that is successful in the long term, which fundamentally will include going against the crowd at times, and that is why I do call this channel the Contrarian. So today I really want to talk about, all of these factors behind a coming melt up in the broader markets. And so far, we have not seen this. Some might say that looking at the very zoomed out charts that you can see out there, that this is a, parabolic stage that we're in, that this already has melted up. But I'll go through the factors of why I actually think that the, real almost vertical stage is coming up very soon. So I'll just get into that. But this is a very contrarian opinion out there. You have a lot of people calling for a market crash, a market correction at least. You have a lot of Permabears out there who've basically always been saying, since 2010 or whenever, that this market would crash, and I don't really give any sort of credibility to people like that because they've just been saying the exact same thing for the last 10 years. But I'll really go into why I believe that this current market is going to melt up rather than correct or just stay stagnant where it is right now before a major crash does take place. So I do somewhat agree with these people in that a massive crash is going to occur, possibly as near as the end of this year, 2021. However, I don't agree with them in that it's going to happen imminently. I do believe that there's still a lot of room to run and at the end of this cyclical bull market. Okay, so the first factor I need to talk about is that of shifting sentiment. And as I discussed in a recent video, there are three main factors that drive the stock market. It can be boiled down to three main factors, and those are fundamentals, technicals, and sentiment. And so far we've had a lot of people pointing out that fundamentals and technicals are indicating a massive crash, and that is correct. But sentiment has also not been there. At typical past peaks in the markets, we've always had the majority of investors out there being very confident that this would be a prolonged bull market, when in fact it was just the beginning of a bear market. So we're not there yet in terms of sentiment. So this will really drive the coming melt up, is institutional money on the sidelines finally getting in to the markets, finally throwing in the towel, just saying, we don't know why the market's so overvalued, but we're just going to put our money in there because we're afraid of inflation. And that gets into my second two reasons for the coming melt up, and that has to do with a massive amount of institutional money sitting on the sidelines. We've seen a lot of what could be called melt-ups or just frenzied buying going on in meme stocks and crypto and some other stocks like Tesla out there, but we've not seen this in the broader market yet. But I do believe that once the institutional money does begin to jump in, does begin to throw aside these fundamentals that they've been worried about so far, that will obviously add a lot more buying pressure into the market and drive it higher. And this, the third reason I would add is that of the fear of inflation. We've already had many higher than expected inflation reports coming out, and that is not unexpected in my opinion, just with all of the extremely high level of monetary injection that has occurred within the last 15 months or so since the COVID shutdowns and everything. So I'm not surprised that inflation has been higher than expected, but I do think this will begin to force investors to jump into the market regardless of fundamentals, regardless of technicals. They'll just psychologically it will be very hard for them to sit out on the sidelines and essentially earning negative returns on the cash that they hold, and while they see other people in the markets doing quite well, and that'll be a psychological thing that eventually does force a lot of these institutional buyers into the market, which will drive prices higher in my opinion. And then the fourth reason I will point out for a coming melt-up being very likely is that of earnings and revenue being increased on all of the companies that are included in the market, all of these, FANGs and just very large companies. So far, we've seen incremental growth, but we have not seen just the full effect that this monetary injection, putting all of this money in the hands of consumers, it will eventually get spent. It will eventually make its way onto the earnings reports of these companies, and that in turn will drive this melt up, and that investors see. Just the other day, Nike came out and had, I believe, highest ever earnings and revenue, and that sent the stock price up some 15% in one day. So I think that's alluding to what is coming for the broader market. It's not just Nike, it's going to be all of these large name companies that massively beat earnings, massively beat revenue, and that in turn drives investor confidence into these companies and into the broader market. So these are the reasons why I believe a melt up is very likely in the near term, the coming 6 months or so. And now I'll discuss why, in my opinion, this won't last and what characteristics there would be at the top and how you could gauge roughly when a top is in. You obviously cannot know the exact day or month or period in time to sell, but these are the characteristics at which I would become very bearish on the market, and it would in fact be very close to a top in my opinion. Now the first reason obviously has to do with sentiment as well, and in order for a market to be at extreme risk of crashing, you have to have all three factors, fundamentals, technicals, and sentiment, being where they have been at prior peaks. So obviously fundamentals are already there, technicals are already there, but once sentiment gets there of investors being extremely confident, just a frenzied buying driving this melt up, at that point when sentiment is shifted from bearish to extreme bullishness, and there's much fewer people out there saying that a market crash is coming or whatever, at that point I would say that this is the first characteristic that you would look for to indicate that you're at or near the top. The second one would be obviously very little money sitting out on the sidelines, because obviously once you begin to have the market crashing, money sitting on the sidelines could be a potential thing to stop that or send it back higher. So once there's really no more institutional buyers sitting on the sidelines, or at least much fewer than there is now, I would become very bearish as well. And the last characteristic of being at the top I would point out is that of just investors throwing out these fundamentals and technicals and saying that this is some new paradigm, that this is a new market, that it's somehow been changed by the Fed injecting all of this money, that in turn justifies the extreme valuations that the market will be at. And it will be at extreme overvaluations. It already is at extreme overvaluations, but it will be even more so at the top of the melt up. And in order to justify that, investors who are still bullish will have to throw out fundamentals, they'll have to throw out history essentially, and say that the Fed pumping all of this money into the system justifies these prices. And at that point in time, when you have fundamentals being thrown out, at that point I would become very bearish. So all of this said, this is not to be taken as financial advice. This is hopefully to explain why I personally believe a coming melt up is very likely. Oftentimes you hear people out there like David Hunter, who is one of the most prominent proponents of this melt up, but he oftentimes doesn't quite explain his views enough, I don't think. So hopefully this helps to explain kind of the factors out there of why I believe a coming melt up is very likely, for the later, last half of 2021. But I could be wrong. All that being said, this isn't to be taken as financial advice, but I hope you guys enjoyed this video. If you did, just consider subscribing, and I hope to see you again.